Hi everyone, welcome back to my YouTube channel. So this is your Manisha, and in today's video we are going to solve long question from the standard costing topic. And this question is from your Kaplan exam kit, because I'm getting lots of query, ma'am. I'm really struggling to solve the question from the Kaplan Kit, especially from the investment appraisal, capital budgeting and standard costing one. So those students who are like struggling, for them this video is going to be very useful. But before watching my video, I will tell you one thing: just give a try from your end. Okay, obviously there will be video always available on my YouTube channel, but once you will try from your side, your mind will start automatically to look for the information to perform your calculations. Okay, so that's why it's very important. Any question you are doing, just give it try from your end first, then go for the solution or the video like this, whichever you found that time. Okay, so let's start the today video, and in today video we will solve second question of standard costing. Previously we have solved question number 466, and in today video we will do 467. So again, one more thing before starting today video. So see, as you guys know, Kaplan and BPP are no longer approved content of ACCA, because ACCA itself has launched their material study hub. So even though you are studying using the Kaplan or BPP study text, but use the ACCA study hub practice question in your preparation phase as well. So because ACCA study hub is the approved content, right? So whatever the question, quiz and the flashcard available on the hub, just go through that. Right, so it's very important. You can follow Kaplan BPP, no doubt you can use it, but still use the study hub as well in your preparation phase. So let's start the today video, and the question is 467. Question is asking, the following is the pro forma operating statement for which company? A company manufacturing candles. So by looking at this format, you might be wondering, oh, lots of calculation has been asked in this question, but it is not the case, right? So if you are struggling with this kind of format, and I think I have uploaded the video on this topic, conceptual topic, so you can watch it from the there is separate playlist, so you can check those playlist and watch this video. It's gonna be very useful for you. Okay, so but in this requirement they have asked specific one, not the full operating statement. Okay, and you can see our first question is which of the following three statements are correct? So now they didn't ask one, not neither two. They asked to choose you three statements, but the correct one. Okay, so it's a bit tricky one. So obviously you need to choose three, means out of these four, one could be wrong, and you need to figure out those one particular wrong answer, right? So if you will figure out that, so you will get rest of your three options will be obviously correct. Okay, first statement is which company uses standard profit per unit to calculate the sales volume variance. So if you remember the formula of sales volume variance, yes, we take the difference in the quantity and multiply it by standard profit per unit. But there are two things, standard profit and one is your standard contribution. Okay, but here you can see they have used the profit, not the contribution. Yes, so this means this statement is correct. Okay, now next one is fixed overhead expenditure variance is the same figure as the over or under absorption of the fixed overhead. See, your total fixed overhead variance is the same figure as of like over and under absorption of fixed overhead, but not of the expenditure one. Okay, so that's why this statement is correct. Incorrect. Okay, these are the two different concepts. Obviously, in our expenditure variance, we just calculate difference between the budgeted and the actual one overhead. And in under and over, we used to figure out absorbed overhead minus actual of fixed overhead. Okay, so that's why this statement is false. But if this statement has said that the fixed overhead, total fixed overhead variance, in that case it would be true. But they said expenditure variance, and this is the wrong. Okay, now as we figured out the B is wrong, that means A, C, D is right. So now let's evaluate why it is right. Okay, so now see, which company absorb fixed overhead on an hourly basis. So there are lots of options to absorb the fixed overhead. So if company is using hourly basis, that's fine, it could be true, right? So you can see there is labor variance as well, so they can use the hour basis. Obviously they are making the candle, so this is the correct statement. And the last one is efficiency variance will all either be favorable or adverse, and this is again true. Why? Because whatever the variance you will calculate, if including the efficiency one, it could be your favorable or adverse. Okay, so that's why this statement is true. Now second, the following information is available for the week company for month 1. So they have provided the budgeted and the actual figure. Okay, so first requirement for the B is expenditure variance and state it is favorable or adverse. See, if you will only write down the expenditure variance, not if you want to mention favorable and adverse, you will lose marks. So be careful in this kind of question. If question has asked you to mark the favorable and adverse, then you should mark the favorable and adverse. And how to calculate this kind of various questions? Just remember the formula. Remember those chart which I have drawn and the link how to remember the formula. Let me show you one more time. See, you need to write down SR 3 times, SR, 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 and the last just write down AR. Okay, then multiply this SR with SH, then 1 again time AH, then BH, and then AH. It's quite easy. 3 times SR, in the last just write down AR, then multiply first SR with SH, then AH, then BH, then AH. Okay, that's fine. So I have just given name for this one, just take a second, A, and for this I have given B, and for this I have given C, D. Okay, now difference of A and B is your efficiency variance, difference of B and C is your capacity variance, and difference of C and D is your expenditure variance, and difference of A and C is your volume variance. Okay, so this is for the variance regarding the overhead expenditure one, but question has asked regarding expenditure, and for expenditure it's a C and D. That means SR into BH in minus AR into AH. Okay, and it's quite simple. Why? Because SR into BS, the figure they have already provided, which is 20,000. So I will write down here 20,000. Then we need to subtract with the actual one, and again the actual overhead figure is also given, which is 23,000. See, you have budgeted that you will only incur the cost of 20,000, but you incur actually 23,000. That means 3,000 more than budgeted. Now it's time to think, is it good or is it bad? Obviously it's bad. You have spent more than what it has been budgeted, right? So that's why it will be adverse. And additionally, you can see if you will subtract this 2, you will get negative sign, and that means it's adverse. Okay, and you need to write down A. That's all for the question B1. Now moving to ask the B, the capacity variance and state if it is favorable or adverse. For the capacity variance, we have done B minus C, and B minus C means let me write down so it will be more clear. Question is asking regarding the capacity variance. And for capacity variance, I said to subtract B and C. And B is our SR into AH minus SR into BH. Alright? Now that's fine. So now SR means your standard hour per unit. No. Standard cost for per hour. Just a second. That means this is standard cost per hour, obviously. मतलब एक घंटे के लिए how much you are paying, okay? And it's already given the question, that's a 10 per hour, all right? Okay, now we need to figure out what is the actual hour. So actual time taken is 2475. So 2475. Now again we came to the budgeted one, SR into BH, which is same as above, which is 20,000 already given. Okay, so what you can do is just subtract 20,000. Or else what you can do is just take 10 and calculate first how much hour is required. So 20,000 divided by 10, it will give us 2,000 hour. Then multiply those 2,000 into 10, it will give the same 20,000. Okay, so now let's calculate this one. So now, 10 into 2475 minus 20,000. And here I have done mistake. I have taken 12 by mistake. It's a 4750 and it's positive. That means it's a favorable, but still you need to understand why it is favorable. See, for standard cost required for actual hour is your 24750. However, the budgeted one is your 20,000. So we have done good, right? Why so? Because it indicates that your labor has worked more, and that's why your fixed overhead cost is incurred more. So it's favorable, right? Okay, then next is your efficiency variance. And to calculate efficiency variance, let's move towards the formula, which is A minus B. A minus B means your SR into SH and SR into AH. SR into SH minus SR into AH. Or you can take the common SR. If you have remembered the formula, you might remember like this: SR into SH minus AH. Okay, now the tricky part is there. Lots of students assume that this SH and BH is same. No, it's different. Okay, and this SS is the actual hour multiplied by the budgeted hour per unit. Okay, so how much hour is required to produce 1 unit multiplied by actual unit that you have produced. This is your SH, but BH is your budgeted one. Okay, let's calculate the figure, then you will have a clarity. So your SR is 10. It's no doubt we have already used the previous this figure previously as well. So now your SH, what I said, the budgeted hour to produce 1 unit, and in question it's given 4. Okay, and this is multiplied by the actual unit you produce, and it's again given, it's a 550 actual unit. Now subtract it by the actual hour, which is already given in the question. That's your 2475. Alright. So that means what this variance say, let me calculate the first, then I will explain. Now it's a negative one, that's why it's adverse. Okay. So what this variance say, so as per, if we will just convert, suppose we have produced 550. So now what will be the budgeted hour for this 550? We will simply multiply it with 4. So that means 550 into 4, it give me 2200. That means to produce 550 unit, we should only take 2200 hours, but in actual we take 2475 hours. That means more than what we have budgeted. So that means company took more than expected to produce the output, and it could be result of like your wastage of time, your lower productivity, or higher cost, right? So again, if you want the reason for this adverse, so it could be again like your labor are not more efficient, they are less skilled, not properly trained, so that's why the wastage happened and it leads to the your adverse efficiency variance. Or machine have been breakdown, that could also result in the actual hour being taken more to produce the 550 unit. So this could be the possible reason. Should know the reason and figure out why this is adverse. See, for the favorable it's fine. If it is coming favorable, then it's fine. But if it is adverse, then in that case we need to find out the reason. What could be the possible reason for the adverse? So, and then after investigation, they used to figure out or sort out those like whatever the reason that causes this adverse one. Okay. So it's quite easy. If you remember the one formula, the whole calculation has been performed and you score the 7 marks very easily. Now next question, and this one is the last. Is the following statement true or false? So what the statement is, a favorable fixed overhead capacity variance is likely to arise if new machine is bought to replace a unreliable one. See, the question is talking about the capacity, and capacity means your B minus C. Okay, B minus C. Okay, so if you are taking out, like if you have bought new machines to replace the unreliable one, so you will get the favorable capacity variance, and it's true. Why? Because if your previous machine is unreliable one, so then it will often like break down, and like this means like the labor have worked very few hours, actually lower capacity uses. Okay, so if you replace this unreliable machine with the new one, the breakdown will happen less frequently. Okay, more hour worked, actually productive hour, right? The labor will work for the productive hour, so actual hour increases. Okay, so this is correct. Yes, once you will replace the unreliable machine with the new one, this can lead to your favorable overhead capacity variance, because it improve the production time, labor are involved in the productive labor hours, so that's why it's a positive one, favorable one. So this is true. So in next video we will do question number 468. So stay tuned with my channel for more video like this, and I hope this video is useful.